In this lesson, we're going to talk about something really interesting. We're going to combine everything that we have learned so far onto multiple time frames, and we're going to combine multiple strategies onto multiple time frames, the higher time frames and the lower time frames. So this is what I've been talking about. This is the hybrid approach. This is the holy grail of MasterClass, right? So the hybrid approach is something that I've created, and it's a combination of swing trading and day trading. And that's why I call it the Holy Grail, because when you find this Holy Grail in the market, it brings so many awesome opportunities, and they tend to happen every couple months. Sometimes every month there's an opportunity like this, and it just really depends whether you capture it or not, but they happen over and over again, monthly, or at least every 2 months. So the Holy Grail, man, the hybrid approach is such a great technique to utilize, specifically if you want to be a swing trader more kind of part-time, right? But it's also great for day traders, right? Because these are the types of trades that you want to be catching, because this is not just a 3-to-1 kind of reward risk opportunity. A lot of times the Holy Grail, utilizing this hybrid approach, is you're literally targeting anywhere from 5-to-1 and up, 6-to-1, 7-to-1, 8-to-1, 10-to-1, maybe even higher than that, depending on your management technique. So this is really where the great reward actually happens. So for swing traders, it's amazing. For day traders, it's also amazing, right? On top of your quick kind of in and out 1-to-1 type of trades or 2-to-1 type of trades, you want to be catching these types of opportunities as well. So this is literally where we combine it all together and we execute. We literally find two strategies. One strategy playing out on the higher time frames, monthly, weekly, daily, and the other strategy playing out on the lower time frames, 4 hour, 1 hour, 5 minute. So that's it for this intro. Let me go break down a couple examples here for you so you really understand what I'm talking about. So let's have a look. So the hybrid approach is one of my favorite trading styles to utilize when trading. If I had to pick one approach, whether it's swing trading, day trading, hybrid, investing, or any of the other kind of approaches that we've talked about within this masterclass, if I just had to choose one trading personality or trading style, I would stick to the hybrid approach. The reason being is that we have a lot of confirmation. So the strategies themselves are already so refined, right? So if you execute them on the lower time frames, they're already so great. But if you also execute them on the higher time frames, just imagine that. We would have multi-time frame confirmation all the way on the monthly, weekly, daily, because there'd be a strategy there, whether it's an advanced breakout, an initial breakout, a CBO, complete breakout, and so on, right? Whenever we have a strategy, that means every single time frame is lining up in our favor, right? So imagine a strategy is playing out on the higher time frames, monthly, weekly, daily. That means the monthly, weekly, daily, as an example, is bullish. And then imagine a strategy is playing out also on the lower time frames. That means that the 4 hour, the 1 hour, and the 5 minute is also bullish, right? So we have a bullish bias all the way from the monthly down to the 5 minute time frame, right? So that gives us a lot of confluence, and there's not much risk in these setups, right? There's just a ton of confluence. There's always risk, but there's a lot of confluence, right? And with that, an extra bonus on top of that is that these types of trades, because there's a strategy playing itself out on the higher time frames and you're executing it as a day trade, but you're holding it as a swing trade, there's a massive reward risk ratio. So you're only risking 1% to make over 5, 6, 7, maybe sometimes even over 10%. 1% risk to make 10% return. That is amazing, right? So that's enough talking for me. Let's have a look at the charts here. And this is a really clean example of a holy grail playing itself out, the hybrid approach. So let's have a look at the higher time frames first. This is what I would consider one of the most aggressive holy grails. It's still amazing, but it will be the most aggressive out of them all, simply because there's an ABO, an advanced breakout, on the higher time frames, right? And if we look at the lower time frames, this is also an ABO, an advanced breakout, on the lower time frames, right? So if you want to minimize risk, obviously imagine if this was a CBO on a higher time frames and a CBO on a lower time frames, that would give us more confirmation than an advanced breakout. But even though it's an advanced breakout, there's still a ton of confluence there, right? It's still a great strategy. So with that said, monthly chart, let's start there, right? So multi-time frame analysis here, going all the way to the monthly time frame, we had this big bullish breakout to the upside, right? And then it broke that monthly 50 EMA, continued farther, but check this out. The last 3 months or so, it has been stalling and decelerating at 0.618 Fibonacci retracement. We had this double doji here at 0.618 Fibonacci retracement. That is it for the monthly chart, but we have a monthly bullish bias. It's a higher high, higher low, rejecting and decelerating at 0.618 Fibonacci retracement. So multi-time frame confirmation now, we should have a little bit more development on the weekly chart. So if we look at the weekly time frame here and we zoom in a little bit, by the way, just a refresher from the LA wave theory lesson, wave 3 run, wave 4 pullback, wave 5 run, and look at that beautiful 0.618 extension target, right? So we covered that in the previous lessons, just a little refresher. But anyway, monthly 0.618 Fibonacci retracement rejection. And then when you look at the weekly chart during that period of time, you can see that the weekly chart was within a falling wedge price action pattern. It was being squeezed within this falling wedge price action pattern. And as the monthly chart gave us that double doji, if we zoom in here on the weekly, at the time of the entry, we had kind of deceleration and then a tweezer bottom, one low test, another low test, and then a breakout, right? So a tweezer bottom and a breakout. So we have a price action pattern and a tweezer bottom candlestick formation breaking out of that price action pattern on the weekly chart. So that is a little bit more development than the monthly, right? But it's still bullish confirmation. Amazing, right? So with that said, we go further to the daily chart. And the daily chart should have even more development. So if we look at the daily time from here, this is an advanced breakout on a daily chart, right? So we have a triple bottom, one rejection, second rejection, third rejection, right? You can count this maybe as a fourth. We have this descending trend line with 1, 2, 3, 4 hits, right? And then as we were being squeezed out of this triangle pattern, we have this bullish engulfing, right? So double doji at 0.618 on a monthly chart, tweezer bottom with a falling wedge breakout on the weekly time frame, a descending triangle with a triple bottom and a bullish engulfing on a daily chart, all breaking out. So after watching the advanced breakout lesson, what would be the best target for an advanced breakout, right? It's typically the middle time frame, the 50 EMA of the middle time frame, right? So if it's a day trade, that would be the 4-hour 50 EMA. If it's a swing trade, that would be the weekly 50 EMA, right? So is the weekly 50 a good target? Check it out. So if we push it to the weekly 50 EMA, there's also a little bit of resistance there, right? From 2016 and 2015, right? So it lines up with the weekly 50 EMA at roughly 1.14. Perfect. So that would be our long-term target at 114 and the weekly 50 EMA. That's the higher time frames, right? So that's the ABO, the advanced breakout on a higher time frames. Now we go further down, right? The entry happened right here. To tell you, the trade happened right there. Okay, it was an advanced breakout right here. Okay, right at the bottom. Perfect. So now when we look at the lower time frames, we go even farther, right? Multi-time frame confirmation here. So check it out, 4-hour chart. 4-hour charts got support again at this level, same as the monthly, the weekly, and the daily, right? So we got the previous lows here, previous extremes. And then at the time of the entry, this was decelerating right there. And then we had this massive bullish low test reversal. Okay, that was the momentum. That was the 4-hour candlestick formation that we look for when it comes to advanced breakouts. And we also have support, right? Perfect. When we go farther to the 1-hour chart, same support level, right? Let's zoom out. There we go. Nice, beautiful rejections. And then we zoom in and you can notice that at the time of the entry, there was a tweezer bottom on the 1-hour chart with this big bullish engulfing breaking out of this descending triangle. Now the triangle isn't as clean here on the 1 hour chart. I would consider this a tiny bit of a discretionary advanced breakout on a lower time frame, but there's so much support. There's that higher time frame bullish bias. There's that massive 4 hour low test that was developing at the time of the entry. And there was a tweezer bottom on a 1 hour chart at support, right? And then a breakout out of that triangle pattern. So everything is still lining up beautifully. And that's where the trade was executed, right? Right here. So that is the Holy Grail. The Holy Grail and the hybrid approach, right, is when we have a strategy in the higher time frame. In this case, it was an advanced breakout, right? It can be an initial breakout. It can be a continuation breakout. It can be an advanced continuation breakout, and so on, right? On the higher time frame. And then you go down to the lower time frame to actually execute the position. So to execute the position, you're also looking for some kind of a strategy on the lower time frame. In this case, it's an advanced breakout on a higher time frame and an advanced breakout on a lower time frame. So took the trade here on a live 5-minute break. There was a little bit of a volume spike there, and 5-minute 50 EMA was broken. Trade was executed, and nice stop loss, 30 pips below the recent lows here, right? Nicely protected below the recent lows. And then the trade was live, right? So we were targeting 114, targeting 1.14 would be 8.79% profit. And again, that was the weekly 50 EMA, okay? And you can see here, this was that breakout play, right? Targeting the weekly 50 EMA. But now we gotta choose a management approach, right? So we execute the trade, there's gotta be a management approach utilized with this. We gotta place a target, our most ideal target, and that's for almost 9% at 114, that weekly 50 EMA. But we gotta choose a management technique, right? So the management technique here utilized, this is a long-term opportunity, right? So long-term management. It starts off as long-term management. And let me explain that, right? So I have my stop loss here, this red dotted line on the 5-minute chart, right? So just follow my cursor. So trade was live, and pretty much I did not move my stop loss till that 4-hour 50 EMA was clearly broken, right? And we had distance, so that if we move our stop loss, we can still protect ourselves. So even at this point, if you look at the cursor on the 4-hour chart, the 4-hour 50 EMA was broken here, but you cannot move your stop loss yet. You know, you can bulletproof, right there, and that would have been fine once that 4-hour 50 EMA was fully broken, but you still want to give it more room, you know. So the first time I started really moving my stop loss, trailing that 4-hour 50 EMA, when it actually started to break out fully to the upside, right? And at this point, I'm trailing that 4-hour 50 EMA. Now, we gotta expect that with long-term setups, right? That sometimes that 1-hour 50 EMA is going to be broken, right? Specifically if it's a long-term kind of trade, right? That 4-hour 50 EMA will typically be respected more, specifically also at the beginning stages of that development, right? So here, there was no reason to really trail my stop loss using the 1-hour 50 EMA, because I mean, sure, I could have trailed it here and make about 3% or so, but I'm targeting 9. I'm targeting 9. This is a long-term trade, right? So it makes more sense to kind of utilize that 4-hour 50 EMA, at least at the beginning. Let me explain that, right? So here it started to explode to the upside, and then finally we had this pullback that started to develop on the 4-hour chart. Broke the 1-hour 50 EMA, but it was just a pullback to the 4-hour 50 in the previous highs, right? Rejected the previous highs, rejected the 4-hour 50 EMA, started to pop higher, right? So again, we're keeping our distance below that 4-hour 50 EMA as we're trailing the stop loss, right? So we're keeping our distance, and now it's accelerating again, right? So at this point, we're pretty much at this high, we would be sitting at about 6%. So at this point, we're almost at that profit target, right? Profit target is just below 9%, we're sitting at 6%. So at this point, I decided to, because this beautiful trend line started to develop, check it out, 1, 2, 3, 4 rejections, right? So this beautiful trend line started to develop. At this point, I switched from long-term management to short-term management, right? Meaning I started to trail that 1-hour 50 EMA. Why? To lock in more profit, right? In case now it starts breaking down, I want to lock in more profit. So at this point now, instead of trailing the 4-hour 50, I'm trailing the 1 hour 50, but specifically I'm trailing the trend line because the trend line is much more relevant than the 1 hour 50 EMA, right? So at this point, I'm just keeping my distance, trailing that trend line, right? And you can see here that eventually it started to break that trend line, okay? So right there, the trend line was broken. Pretty much we made a double top on a 1 hour time frame, came very close. I mean, about 2% away from that profit target of 9%, just under 9%, and started to develop a double top, right? And broke the trend line to the downside. At this point, I was still waiting because you can see that the 1 hour 50 EMA was rejected once, twice, 3 times, right? Then the trend line was broken, but we were still holding and decelerating on that 1 hour 50. So in my mind, I'm like, okay, you know, there is a bearish engulfing on a 4 hour chart, but price action is still holding and decelerating on that 1 hour 50 EMA, right? Enter on a trend change, exit on a trend change, right? Part of short-term management. So now I'm just waiting for that clear break of the 1 hour 50 EMA. And it happened right here, right? The 1 hour 50 EMA was clearly broken, and that's where I manually exited the position. So I had my stop trailed, right? If I wasn't on the charts, I would have been stopped out for about 5%, right? But the 1 hour 50 EMA was clearly broken, and at that point, utilizing short-term management, manual exit, at the break of the 1 hour 50 EMA, I decided to take profit. Now, that was a profit of 173 pips divided by 30 pip stop loss. That's a profit of 5.8%, right? 5.8%, I was targeting 8.8, so 3% less, but still 5.8%. Now the reason to exit, obviously you could have utilized the 4 hour 50 EMA, but at this point it was already great numbers. So I'm more of a shorter term trader, right? You could definitely keep on utilizing long-term management, but I know my personality being a little bit more short-term and preferring a little bit more short-term, right? Hence why I started off with long-term management, but as we were going and really the price action was pushing to the upside and we started to run at really good numbers, I switched to short-term management to really lock in that profit because I just want to lock in profit and move on, right? So if we look at the higher time frames, this now is an IBO, right? It fully broke out. So I took that advanced breakout here, it fully broke out, and now it's an IBO, right? So if it's an IBO, chances are it's pulling back all the way down to the daily 50 EMA, right? Before it continues back up to the weekly 50. So I don't want to hold the pullback all the way down to the daily 50 EMA. Being more of a shorter term trader, right? Kind of that hybrid approach. Again, if you're a fully swing trader, you can just hold it, right? But I want to lock in profit, so I don't want to hold the pullback down to the daily 50 EMA. Guess what? I'll rather take my 6% or just 5.8. And if it pulls back to that daily 50 EMA, presents an IBO, guess what? That's another Holy Grail, right? So if there was an IBO here, you can take another Holy Grail up to the weekly 50 EMA, right? So that's how you play this. So beautiful trade here. That's how it was executed for 5.8%, and this is the Holy Grail. So that's one example of what a Holy Grail looks like, and this would be the most advanced out of all Holy Grails, simply because it's an advanced breakout on a higher time frame and it's an advanced breakout on a lower time frame, right? I'm going to show you one more example of one of my favorite Holy Grails, right? So that one is a little bit different. Let's have a look. All right, so now I'm going to show you an example that we have already seen a couple times. It's one of my favorite multi-time frame analysis setups. It's also one of my favorite Holy Grail setups. And it's also one of the biggest positions one of the biggest trades I've taken. But also I've missed a lot of profit on this opportunity simply because I utilize short-term management. So it's just a really interesting opportunity that we have seen a couple times. So I'm just going to talk about it since now this is the Holy Grail, the hybrid lesson. So pound dollar short. If we go back to the higher time frames, you'll remember this setup. It was this beautiful monthly chart, right? So if we do our multi-time frame analysis real quick, right? Beautiful monthly resistance. Check out all that support here. 1, 2, 3, 4, 5, right? What was once support became resistance. We had this beautiful break to the downside and a pullback to reject that support and resistance. The monthly 50 EMA, 0.3 to Fibonacci, and then it developed this beautiful high test reversal. So this could be like a really long-term opportunity. If you wanted to hold it for a year or so and target the extreme lows, you definitely could, as a kind of like a long-term investment or a very long-term swing trade, right? It just really depends on your personality and your style. Now, multi-time frame analysis, we got this resistance here on a weekly chart. We're developing this double top price action pattern at the same resistance level. Right, if we zoom out, again, we can see the rejections there. So same level as the monthly chart, and again, we're developing this double top, kind of a bearish engulfing at the time of the entry. On a daily chart, this was also an advanced breakout on a daily chart. A lot of these Holy Grails, they will be advanced breakouts. Remember, the advanced breakout will be the first opportunity. It could also be one of the largest opportunities, right? But an IBO is typically one of another great opportunity that could happen after the ABO. So if you catch these Holy Grails, these hybrid setups on a higher time frames, if you catch the ABO, you can take profit, make really good money, and then you can potentially catch another IBO, maybe even a CBO, and so on, right? So the Holy Grails can look in many different ways, but an advanced breakout is typically the first Holy Grail that occurs on a higher time frame, right? So on a daily chart, again, we have the same resistance level as on the monthly chart, but again, it's also rejecting the monthly 50 EMA, 0.3 to Fibonacci, and all that good stuff, right? On the daily chart, we were developing this ascending triangle. We had this little breakout, but right away we started to fall back down with a bearish high test reversal. So we have full multi-time frame analysis confirmation here, and we already looked at this setup within the multi-time frame analysis lesson. So we're familiar with it. That's the higher time frames. It's beautiful, right? So what's the best target for an ABO? Again, it would be potentially the weekly 50 EMA. One of the safest targets, weekly 50, previous highs, that would be a really nice target. Obviously, we got to keep in mind all our support levels. So there's a support level around the 20 EMA, previous lows, weekly trend line, and so on. But looking at the monthly chart, this could very well just continue going down all the way to those lows, right? So that's the high time frames. That's the Holy Grail. Again, this is where the setup started to occur. Now, we go farther down. This was an IBO on a lower time frame, right? So on a 4-hour chart, we had this break of a trend line, and then not the best IBO, simply because if you look at the 1-hour chart, it didn't give us like that most epic, clear break to the down. So you can see that 0.32 and the 1-hour 50 EMA don't really line up. So I would consider this, again, a little bit more of a discretionary entry, right? It's still an IBO. It's a little bit more of a discretionary entry. And I'll talk about this a little bit more later in MasterClass when I talk about discretion, right? Discretion is only good when we have beautiful higher time frames, right? If you want to get discretionary with entries like this, right, there still needs to be a setup there, right? It might not be perfection. Like in this case, 0.32 in the 1-hour 50 EMA could have lined up. That would have meant that the 1-hour chart would have to break down farther down, you know? And then that would bring the Fibonacci retracement down, and then it would line up with the 1-hour 50 EMA. Obviously, it did not, but there was so much potential here that you could utilize a little bit of discretion as long as there's still an entry, right? Simply because of the higher time frames. The higher time frames are so good. Reward risk ratio is massive. Risk 1% to make potentially 13, right? Potentially more if you're using long-term management and so on, right? But risk 1% to make 13, you can get a little bit discretionary, right? As long as the setup is still there. So in this case, the IBO was still here and broke that 1-hour 50 EMA, came back to reject that 1-hour 50 EMA, hit 0.382 on the 5-minute chart and started to fall down, breaking the 5-minute 50 EMA. Entry was live. And this is the Holy Grail. It's an advanced breakout on a higher time frame with a lot of confluence, and it's an IBO on a lower time frame. Holy Grail, the hybrid approach, right? So this is what I'm talking about regarding the hybrid approach. When you find a strategy in a higher time frame, execute it as a day trade, you can get this really big reward risk ratio, right? So now, going further, I covered this trade in the management lessons as well, right? So if you want to go back and review the management lessons, this trade was covered there. And I'll just briefly talk about it here because I ended up exiting the position right here. So you can see that the 1 hour chart started to break down, right? And as it broke that 1 hour 50 EMA and came back to retest here, this was kind of like a CBO setup, started to fall down. And this is where when I started to trail my stop loss, right? Initially waiting for that 4 hour 50 EMA to be clearly broken, right? And then once that 4 hour 50 EMA was clearly broken right here, that's when I really started to trail that 1 hour 50 EMA. A little trend line developed, so I'm trailing that trend line. And then right here broke out to the upside. And as it started to break out to the upside, I took my profit because I like short-term management. I like to just get in, get out, and move on, right? So I took profit right there for, I believe it was just over 6%, 329 pips divided by 55 pips stop loss. Yeah, 6%. So took this profit for 6%, and guess what? It ended up falling farther down, it was like a false breakout here on the 1 hour chart. And then it just continued to go farther and farther and farther. Check it out, until it finally broke the 1 hour 50 EMA again right here, So if we look at the higher time frames, I ended up taking profit right here on pretty much just on the 20 EMA, weekly 20 EMA, previous weekly lows, because that's when that 1 hour 50 EMA was initially broken. And again, I utilized short-term management, right? If you utilize long-term management, trailing the 4 hour 50, well, check it out, 4 hour 50 EMA wasn't clearly broken till, oh my God, all the way back there, which this would have resulted at 1.33. That would have hit that weekly 50 EMA target for 13%, right? So 13% would have been made. I made 6. If I utilize long-term management, my target would have been a hit for 13%, double the profit, right? Hence the benefit of long-term management if you want to hold longer term, right? That's the beauty of long-term management. So 13% profit instead of 6, but I still made 6, which is still amazing using short-term management, right? Now this continued to go farther. The next time it broke the 4 hour 50 EMA was actually 1.33. So if you did not have a target at the weekly 50 EMA and you just pushed it utilizing 4 hour 50, right? Management, the long-term management, that's where it would have broken out. And if you pushed it all the way down to the lows, it did get all the way down here, so that would have been even much more profit. So that's it. Here's an example of a really good opportunity that I made just over 6% profit on, and it could have continued going farther, and it did actually continue going farther and farther and farther down. I could have made double, triple what I've actually made, and that's the beauty of Holy Grail setups. I'm perfectly happy with 6%, right? I don't have FOMO, I don't have fear of missing out, and I stuck to my management plans. But if your management plan is a swing trader, long-term management, then you could have pushed much more profit at this as well. The beauty of Holy Grails, the beauty of the hybrid approach, right? It's amazing. So if you want a refresher on the management techniques, go have a look at short-term management and long-term management again, and really decide which kind of personality you want to be. I like quick and out, quick in, quick out, but there's a beauty in long-term management as well, for long-term swing traders. And the thing is, I evolve with my personality. If I'm traveling the world, if I want to be a little bit more hands-off, guess what? I'm going to be utilizing long-term management. If I want to be more on the charts, full-time, I'm probably going to be quicker, in and out, in and out, in and out, short-term management. So that's it for the Holy Grail lesson on the hybrid approach. This is the hybrid approach. Hope you enjoyed it, and I'll see you in the next one. Take care.